Hello and welcome to Homely Podcast, your go-to guide for smart property investment in Spain. I'm Magdalena, and today we're diving into a very exciting and increasingly popular topic that is on top of the mind of so many international guests and clients: getting a mortgage in Spain. So whether you're just starting your property search or you're already in love in a place in Valencia, understanding of how financing works is absolutely key. And let's be honest, it can feel a little bit daunting from abroad. That's why I am absolutely thrilled to be joined by Bożena Brunowska, Senior Mortgage Advisor from Mortgage Direct, one of the most trusted names when it comes to helping international finance buyers of getting and acquiring their Spanish dreams. And their mortgage advice has been of 98% of approval rate. So Bożena works daily with clients from all over Europe and has an insider's view on what banks are looking for and how to avoid common pitfalls and how to get the best deal possible. So thank you and welcome in this podcast. I'm really happy to have you here. And if you don't mind, just tell us a little bit more about yourself, Bożena, how long you've been doing what you're doing and what are the most exciting insights from you right now.
Hi Magda, thank you for having me here. I've been mortgage direct, I've been mortgage broker in Spain for the last 9 years. I think I've arranged in a region of about 750 mortgages since I started. Of course, I've seen many profiles. We normally get in a region of 3,000-4,000 profiles per year. But very often those profiles are rejected because of the strict criteria in Spain. But I have knowledge, I have experience, and it always makes me smile when my clients say my situation is unusual, and I think I've heard it before because I've been doing this for a very long time. Mortgage Direct started in 2006, so next year we're celebrating 20 years anniversary. And it's worth mentioning that we are regulated by the Bank of Spain, and we all subscribe to data protection, so clients' confidentiality is very important.
Fantastic. Thank you so much. 20 years. Wow. I hope there'll be a lot of celebrations and quite interesting insights. So I'm already recommending to all to be following Mortgage Direct on social media, not only. I guess there'll be a lot happening. So exciting as well to hear what you just said, that every person comes in saying about the unusual circumstances. So before we deep dive into it, maybe let's have a little chat on what's the normal mortgage process in Spain for foreign buyers. What is the step by step from pre-approval to completion, how long it usually takes, and is this process any different for EU citizens?
So the starting point is always calculating how much you can afford and client's budget. Once we have this information, we collect all the documents and submit to the bank that we feel is going to approve the case. That includes organization of all the documents, explanation, writing a report, and sending nicely to understand for the bank's package case to the risk department. The decision normally we receive within 2 weeks. Sometimes during the summer season it might be longer, but it depends. Once we have the decision from the bank that mortgage is pre-approved based on client's finances, the client can then start shopping around for the properties. Once we find the property that client likes, we check how the property will be valued. This is very important. We will cover the valuation later on, but knowing this at the start is very important. Assuming there are no complications with the valuation, we progress to a step number 2. Once the valuation is back, we then, the bank, close the case and pass it on to a legal department to prepare the contract between the client and the bank. The document that they're preparing is called FAIN. And once the client signed this document, this is then sent to the notary, and we start cooling off period. Cooling off period, it varies between different provinces in Spain. It's between 10 days to 14 days in Catalonia. During that period, the client is required to visit the notary and sign acta. Acta is basically understand that the notary wants to make sure the clients understand the conditions of the mortgage. So the ACTA can be signed a day before the completion. So you can sign the ACTA on Thursday, you can complete on Friday, but that visit needs to take place. We advise very often the clients to authorize the solicitor to act on their behalf, just to make sure in case the clients cannot be busy due to work or for whatever reasons, it's good to authorize the solicitor to do it. The whole process, if everything goes well, takes from 2 months to 3 months, depending on the time of the year.
That's very interesting, and thank you very much for that. And I think, yes, as you mentioned, Leon, obtaining this power of attorney in advance just in case helps a lot in these kind of situations. The very interesting part of what you just said is firstly dealing with you and then to start shopping with properties. I guess that's also very important for the clients to understand what's their final budget, right? So what would you actually recommend to the investors right now? So they start looking, then they think that they might need a remortgage. So it's really important for them to establish the threshold, right, of what's the maximum budget they can allow themselves to, and then really take into consideration the mortgaging options and the process it takes. So is the mortgage an item that needs to be checked on the list before anything else? So does it happen in parallel? What will be your advice? Because we also know that the Valencia, especially right now, is quite complicated. So any good and well-priced apartments are disappearing immediately. So what would be your advice?
Absolutely. It's something that we're going to cover later down in our interview, but I would highly recommend having the mortgage pre-approved. The reason for that is you might spend a week viewing the apartments, properties, only to find out that actually you cannot get the mortgage, the amount of mortgage that you need, because very often the clients assume that the lending criteria will be more or less the same as lending criteria in their own country. And this is a massive issue, and we have seen many clients being highly disappointed. Sometimes, in the worst cases, the clients will lose the reservation deposit or even the ARAs, especially if they approach the banks directly, and banks give them a false information to say, yes, you can have a mortgage, only to find out 4 weeks down the line, no, you can't because you don't meet the criteria. I would recommend to all the clients I'm dealing with to start the process about 3 weeks before the due to arrive in Spain, with the view to start viewing the properties. That way it gives us a time to collect all the documents, send it to the bank and get the mortgage approved. It doesn't matter at that stage what property we're looking for, because it's approval based on finances, not the property. But that gives the client a peace of mind that, yes, I can start viewing and I can commit to the property I want because I'd have a mortgage approved.
Fantastic. That's definitely a tip number one. Start at least 3 weeks before the viewing. I'm just going to write it down, not to forget. Fantastic. Thank you very much for this insights. So from your perspective right now, should foreign buyers go directly to Spanish bank or use mortgage broker? What are the pros and cons of each route?
Of course, I'm going to say mortgage broker.
What a surprise. But tell us why. Tell us why.
Yes, there is a good reason for this. What we notice, we get a lot of phone calls from the clients in desperate situation where they actually approach the banks directly. And the issue is that the local branches, they don't always understand fully the client's situation, tax returns, credit report, different types of currency in which client is earning, the setup of the business. They very often give clients incorrect information. Sometimes clients even receive the illustration for the mortgage and say, I've got the mortgage approved. And I always ask the client, but have you sent the documents? Have you submitted all the case to the risk department? And I very often get the answer, no, I've just spoken to a person in the branch and now the mortgage is declined. I paid 10% deposit on the property. Please help me. We've seen it on average. I would say 20% of all my cases are clients that are coming back from the banks because they were given incorrect information. They assumed they can get the mortgage, and then once they submitted the documents, the decision was different. Or they could get the mortgage, but not the amount that they needed. Reputable mortgage broker, we either ask the client to complete affordability check, or we ask them to send tax return, last 3 years tax returns, most current credit reports. Based on that, we calculate how much will be possible, and I can confidently give the clients an answer within a couple of hours. Yes, you can have a mortgage. No, you cannot have a mortgage, and the reason why, 50-50. It's borderline where the criteria is almost there, but not quite. But there are more good points about the case than bad points, and I'm thinking it might be approved. As an example, I had a client a couple of years ago who was fiscal resident in Germany. So you would think no problem within the EU. But the income originated in Guatemala. The tax, some of the income was from investments in the US, some of the income was from Guatemala, and she was unemployed. She was declined by almost all the banks in Spain, and I investigated all her tax returns, all the investments, all her situation, and I said, I think I can get this approved. She was very upset and reluctant to send me more information. I said, just trust me. If I don't get your approval, you've got nothing to lose. And we got the mortgage approved at 70%. It just comes to show the 50-50. Sometimes we say to a client, there is more good about the case than is bad, and I'm going to submit it and try. But normally we can say yes, no, 50-50 to a client. And that's the difference between the mortgage broker and the bank. The bank's local branches, either don't have enough time to study the documents, B, they don't understand, C is the language barrier. And this is where the drama starts.
I guess the case you've shared is one of the complex cases, and I can see why. And I have walked through so many different questions, maybe starting from what you mentioned. So to assess how much a foreign buyer can borrow. What you mentioned, we need a proof of income, so the tax document, for example, right? What happens, for example, in the countries like Poland when we have a different currency? And if you could also tell me if there's a need to immediately translate the documents, or you have a way of like scanning and checking if these documents are in a different language and in a different currency.
Clients coming from countries that are well known for purchasing in Spain, so US clients, UK clients, Germans, French, it's not a problem. The documents don't have to be translated. Clients coming from countries where they are quite new to the property market in Spain, very often the banks struggle to understand the document, the taxation, especially for Polish clients, because there are many tax returns. And also it's a very, very new market, and they don't have a history of how the client is dealing with mortgage repayments, whether they pay on time. The banks always request a credit report to see how the client is dealing with current financial commitments, are there any missed payments. So they don't have that history, and hence for any countries, which includes Poland, that they are not new to the market, the banks pay special attention. We have in Spain 4 banks that will lend to Polish clients. One of them will require all the documents, including bank statements, savings, everything, translated by a sworn translator. So that's additional cost. All the other, the remaining 3 banks, they will accept our translation. We translate all the documents on our system and send it to the bank, and that is acceptable because we are registered with the Bank of Spain. We've got license, and we have the data protection license, so they will accept the translation. But it is more difficult to get approval for any clients from countries where the Spanish risk department don't have experience with.
It's very interesting, but at the same time also surprising because I would believe that the client base from Poland has been on the rise for the last year. So this credit history, this assessment, how many years it takes in consideration, like 10 or 15, and why Polish buyers are still a bit of surprise for Spanish banks. How do you see that? How could you explain that?
The credit history is important for the last 6 years, and the reason with Polish clients started buying in Spain, I would say last 2 to 3 years.
Mhm.
US clients, UK clients, they've been buying in Spain for the last 30, 40 years. And it's a difference in the time of, the banks now have very good profile of UK or American clients because they have 30 years of history. With Polish clients, 2 to 3 years is the maximum, and that's not long enough for them to assess. They want to see a mortgage run through the whole term of the mortgage, which is very often 20, 25 years. So they don't have that history yet, and hence they're very, very careful.
Thank you very much for this explanation. But what you just mentioned, there are four banks. I believe at the moment you are not able to mention the names of these banks. But if we had clients coming over to you, then you'd have a go-to banks already with experience, right, for the
Yes,
Polish
absolutely.
investors.
Absolutely. Yeah.
Fantastic. And what about clients coming from outside of EU and not even mentioning now Great Britain, but countries in general from outside of EU, let's say Latin America, any country, and then maybe if you could just give us an insight of what would it be, for example, for Iceland, so from the European Economic Area, but not directly EU.
This is a quite complex question, and we can talk about it for 1 hour just about the currencies and different nationalities. We're going back to 2019, where Bank of Spain regulated mortgage market. One of the rules that they introduced to protect the clients is, for instance, if you are earning in US dollars and you take a mortgage in euros, if there is a currency fluctuation between US dollar and euro of more than 20% during the lifetime of the mortgage, you are eligible to convert your mortgage into US dollars. So as a consequence of that, many banks said, I'm sorry, we're not going to take this risk, and they stopped lending to clients in various currencies. The list is quite long, so I would suggest, if you have any clients outside the normal countries that buying in Spain, please consult. The main countries: US, Canada, the Nordic countries, including Iceland, European countries, Saudi, Hong Kong, Singapore, those are still acceptable. In many cases, if the client comes from the country where the currency is not acceptable by the banks, we can still find a solution, and client can buy a property through a sell company. So it means that the company is created, the NIF number is registered, and the bank avoid the currency risk, and they are happy to lend. Normally in buying through the SL, it's about 60%.
Okay, fantastic. That's really interesting. But I guess it also then affects the whole process, right? So the process, the whole evaluation might be taking a bit longer and the whole resolution.
Not always, because a lot of solicitors, they already have ready-made SL companies for that reason, and hence at the moment I have a client, very good profile, a very wealthy client, but he is a fiscal resident in Thailand. So that's not something that is acceptable in Spain, but we can still get a mortgage through a SL company. He bought the SL company via the solicitor, and we can get him 60% mortgage. So he's happy. We're happy.
Okay, that's really interesting. And what you mentioned that the values in that case would be about 60% of the mortgage value. On average, what is the percentage of the property value a foreigner can finance in a, let's say, a standard condition? So EU national. I know the cases would depend, but let's maybe talk about the most optimistic scenario and then maybe what you see on average basis.
On average, we generally say to our clients a mortgage up to 70% is possible. We are more confident, again, going back to countries where the banks have the knowledge and history of behavior of the client. So we're looking like US, Europe, UK. That's normally not a problem. For instance, funding and Polish clients that you touched on, it very much depends on the client's profile. So whether sometimes if client is self-employed, that we don't have a history of self-employment of the last 5-6 years, we only have 3 years of self-employment, the bank may reduce the loan to value to 60%. So depending on client's profile, the stronger the case, the more likelihood we get 70%. But it's taking me back to the point number one that we discussed, that starting point is calculating, presenting us the case so we can make a judgment what will be approved, what is likely to be approved, and then submitting the documents to the bank and giving us the final mortgage amount, whether it's going to be 70%, 60%. The client knows at the outset what they're going to get.
Right. Even more reasons to work directly with the mortgage broker, right? To have this peace of mind and being able to maximize the time and or minimize the time of waiting. Can you tell us a bit more if there's any, differences in buying and financing an apartment, let's say in Valencia, so in the region of Valencia versus, for example, Barcelona or Madrid? Are communities having an impact on the mortgage rates and mortgage times and let's say openness, or that's like straightforward law for the entire country?
It's the where the client is buying, whether they're buying in Madrid, Barcelona, Marbella, Valencia, Ibiza, it makes no difference. What makes the difference is the client's profile. So loan to value, debt to income ratio, which currency they are earning. That makes the difference. And also the type of property that they are buying. So whether they're buying normal residential property, whether they're buying touristic property, or whether the property is rustic.
Okay, could you tell us more about that on the property type and how much does it differ?
So the normal residential property, we can get 70%. It could be a residential property with a tourist license to rent the property short term. That's not a problem. Touristic property normally suffer bad adverse valuation. Those type of properties are normally valued lower, and also a lot of the banks will only lend up to 60%. The same applies for rustic properties. Rustic properties, normally the mortgage is between 50 to 60%.
Stick, you mean like hotels or like boutique hotels? Because what you mentioned that the residential, even with a touristic license, then it could be still up to 70%. But touristic itself, what would it be? Like a small hotel?
This is quite difficult to explain because I'm not the solicitor, but the touristic means it's a classification that is showing on Nota Simple, which is the property deeds, that the property is classed as touristic. Very often those properties have restrictions, and it's the purpose of this property is just purely tourism, but it's the classification in the Nota Simple, because you can have very often residential area and normally you will have the communal pool, there might be a restaurant, there might be a gym, and some of those properties or flat within that complex will be residential and some of them will be classed as touristic. And when the class as touristic was the banks almost treat it as commercial and hence 60%.
Just a couple more questions. So you've mentioned before in the part of the process the property valuation. So how much the property valuation can impact the mortgage offer?
Massively. And I can give you some bad examples. But the valuation is very important, and hence we say in the early stages to the client, first, let's calculate how much mortgage you can get, and once you find the property, we check the valuation. This is super important because the bank will lend you a percentage, so whether it's 70 or 60% of either the purchase price or the valuation, whichever is the lowest. Now, valuation is a complex subject, like everything else, regarding the mortgages and valuations. In going back to 2019, when Bank of Spain regulated the mortgage market, another rule that they introduced was that the buyers can now instruct the external valuation. So we no longer have to go through the bank. And with the valuation, the way bank selected the companies that they can use was random. So they didn't have a choice. There is about 9 or 8 companies that can do those valuations. And the criteria is that they're registered and licensed with the Bank of Spain to produce the report for mortgage purposes. So for them, it's very important that they arrived at the correct value. So with the bank, they could not choose. Now, looking at now that we can do the external valuations, we work with companies where they can do the valuation through a number of companies. And the way the valuation works, that the surveyor has to compare the property that the client is buying with 6 properties within the certain radius of this property and arrive at the average price. The issue is where there are no similar properties within that radius, they have to then use lower price properties, and hence the valuation can come back lower. As one of the examples, 2 examples, if we have the time. One is the most recent, a client is buying in San Sebastian. The purchase price is 2,200,000 euros. And I consulted our company about the valuation, and we came back with 6 different prices, starting from 1,300 euros. Sorry, 1,300,000 euros. We had 1,800,000, 1,700,000, and only one company arrived at the full asking price, 2,100,000. The client needed 70% mortgage. So you can imagine if client went to the bank and the bank computer system selected incorrect valuation company, potentially that valuation might have been 1.2 million, in which case the bank will lend 70% of 1.2 million, and the client will have to make up the difference because at that stage he already paid 10% deposit on the property. So there was no point of return. He was committed to buy the property. So it's very, very important. And another sad case I had very similar was a case in Tenerife where a client was buying similar. Don't remember exactly the prices, but it was similar in a region of 2 million. But he contacted me too late. I could not help them because he already had a mortgage approved. He went directly through the bank. They selected random company. The random company came back at the valuation of 1.1 million. Unfortunately for that client, he could not make up the difference and he lost 210,000 euros because he could not proceed. Although we could get higher valuation for him, once the bank do the valuation themselves, they are very, very reluctant to accept another valuation because you're competing in prices. If you have one company saying 1.2 million, the other company saying 2 million, they will not accept it. So it's better, even banks telling us, please instruct the valuation. Don't go through us because we don't know which company the system is going to select. So valuations are huge issue. 1 is getting a mortgage pre-approved. 2, valuations.
Could I just ask you for this, the two cases that you've mentioned, was it because these were the mansions, the houses that were also like, slightly in a remote location, or that just one of the example of the cases, like regardless if we're talking about 2 million, it can also happen to a flat of the value of 200,000 euros in a plain city center. The case applies to both.
Yes, absolutely. Regardless of the price of the property, it can happen to any type of property and any value of the property. If somebody is buying for 200,000, but the valuation comes back at 150,000, they have to make up the difference or lose the deposit. There is no other way around it. If you approach the bank, a mortgage through the broker and valuation through the broker, then you are protected because we tell you in advance, hang on a second, there is a problem with the valuation.
Okay, really, really interesting. So definitely we know what to look out for. I forgot to actually ask you for the very simple yet important question. So we're talking about 70% of the value for the mortgage. What happens if investors comes with the cash of, let's say, 150,000, but they are looking into the house of 200 and more? Is there any starting mortgage price, let's say, that you could do? What to look out for, what's sort of the recommendations? Because at the moment we tend to have a lot of cash buyers, but since also the prices are on the rise right now, especially in Valencia, they are looking into the options to add additional mortgage to be able to really buy the dream house.
The minimum mortgage amount with some of the banks is 50,000 euros. Getting approved anything lower than that is very complex because the banks are saying we don't want small mortgages. So a starting point is 50,000 and the top mortgages, if we start looking at mortgages over 1 million, it is then more complex because the bank is taking the risk of lending all this money against one property, one client. So very often those cases need to go and be pre-approved by the Central Risk Department in Madrid.
Okay. And just to clarify, for these 50,000 lent, then we getting the full amount, right? Like we're getting them 100%, or it's still the mortgage of 70% out of the 50,000.
So the 50,000 is the mortgage amount. So that 50,000 needs to represent between 70 to 60% of the purchase price.
Thank you. Sometimes I like to give the examples and the numbers, so then there is no doubts. Okay, thank you. That's really interesting as well. So just maybe if I could ask you for three final questions from everything that you're mentioning about the process, about the valuation. I think we covered a lot of points already, but if you were to give like five most common mistakes foreign buyers make when applying for a mortgage in Spain, what would they be?
Number one, not checking whether they can get the mortgage. That's a huge issue because it's affecting all my colleagues. We have 25 advisors now in the company, and we all complain that we're dealing with dramas. Clients are not checking what they can borrow. Second is the valuation. It's the second nightmare of any mortgage broker. A client that goes directly to the bank, they instruct the valuation is lower, they contact us, but it's too late, we cannot help them. Number three would be not allowing enough time. So depending on the time of the year, sometimes it can take longer for the mortgage to be approved or the legal department to issue fine. It's a holiday season, so very often we see contracts for 2 months, and it might be okay if the client is organized with the documents, but on average, from our statistics, each client takes about 2 weeks to give us all the documents that are required to the bank. We are reluctant to send cases to the banks where are not fully documented because we are aware and we respect the time for the risk department having the case sat on the desk that is not completed. Another point that is important to mention, it's not consulting the solicitors, not instructing solicitors to check legality of the property, whether there is any outstanding inheritance tax issues, whether all the square meters are registered. classification of the property, whether there is any debts registered against the property. It's another issue. And I think those are the main issues that I would say that I kind of, it's always, when I'm working with the clients, it's always step 1, approved. Okay, we've gone 1. Step 2, valuation. Phew, we've done it. Valuation is good. Step 3, legal. Check the legals. And 4 is completing on time. Once we're completing on time, we celebrate.
Fantastic. Thank you so much for that. And just a final question from me. This is like resurfacing quite a lot. I know it's been done in the past. Sometimes we're getting asked about the options of remortgaging services, service that is very popular in Britain or in American markets, not so much in Spain anymore. What's your take on that? Is it possible to remortgage properties that you already bought here in Spain? What's the current
I
scenario?
would say no. It's going to be just a simple answer. It's not. It's not possible. And believe me, in the last 9 years, I have tried because many clients contact us with various scenarios. Some of them have a dramatic personal situation. They need to release equity from the property. The banks don't want to do it. There is one bank that advertise in Spain that they can do equity release over 15 years, up to 50% of the valuation of the property. I sent them many cases and I had no approval, and there are good cases. Where the debt to income ratio is good, the clients are wealthy, good income, employed. There is nothing bad about those cases. They just don't want to do it. The only time they will consider remortgage is if we have a married couple and they're getting divorced, or one of the partner died. Yes, it's divorce, or if one of the partner dies. Those are the 2 cases. Or renovation of the existing property. But that's almost not classed as a mortgage. It's more classed as the loan for renovation. There's only one bank in Spain that truly do the renovation mortgages.
Okay, and why is it so? Why is a service that is quite popular in the UK right now and in Spain not anymore? Is it due to the financial crisis in the past? It's difficult to say.
We don't know. For the last 19 years, we've been asking banks, why are you not considering remortgages? You can have so much more business. You have a client that have a property without the mortgage. They want to release equity from this property to buy another property. We can do a mortgage for you if you want, and it's a business for you, but they will not consider. We have no idea why this is. My fear is that they are so busy that they don't want to get involved with something that they class as complex. So
Okay.
refinancing, it's not possible. So when I'm talking to our clients that are considering, should we buy cash or should we buy with the mortgage, I say, get the mortgage. If you don't need it, pay it off. Don't leave yourself in a situation where you then want to
You're
buy
desperate.
another property and you can't because all your funds are tied into one property.
Wow, okay. That's very precious advice. Maybe, Bożena, if I could just ask you, because I forgot to ask you for the very beginning, maybe you could also give us a little bit more information about, Mortgage Direct. You've already said that you are, super professional, what the service is, like you spoke about the cases you've resolved, but maybe there's anything else that you would like to mention to the clients, that are listening right now. Why go directly to you? Mortgage Direct, directly to Bożena, directly to the team.
We are one of the oldest company in Spain. Our brokers are mainly from the UK, so we were working in the finances before. Like I used to work for HSBC Bank. I'm qualified financial advisor and mortgage broker in the UK. We've done the qualification in Spain. We abide with the data protection. Clients' personal details is very important to us. We do the calculations based on what client circumstances. We recommend the bank that it matches client's profile. We're not commission driven. So a lot of protection by using us. We have 4.9% Google reviews. We speak 17 languages between all our brokers. We cover all of Spain. We have many contacts within Spain. So if the clients want to buy in, I don't know, Malaga and needs a solicitor, architect, currency broker, we can recommend guys that we worked with for the last 19 years. We know how they work. So yes, there is a lot of benefits using Mortgage Direct because we are all professionals and we try to help the clients and we have a very good reputation.
Thank you. That was best and better than any Spotify. I was just listening to it as a podcast. I'm thinking that was just like a perfect announcement. Why to go to Morning Direct? That was absolutely fantastic. So really huge thank you to you, Bożena. That was really clear, sharp, practical insights. And for anyone that are thinking about financing property in Spain, this episode, I think, was packed with the golden advice. So for everyone's watching, listening right now, at Homely, we're here not only to help you to find the right property, we can also connect you directly with Bożena and her team and mortgage specialists, as well as other trusted professionals who, as you heard, speak your language, one of the 17 languages. That's really fantastic. And they truly understand the needs of international buyers. You've heard some of the very difficult cases that Bożena and her team were able to solve. So I don't think any of you need more convincing. And if you found today's episode useful, please hit subscribe and share it with somebody that you might be exploring the Spanish market. And stay tuned for another more expert-led episode. So thank you once again, Bożena, for coming and talking to us. And thank you all for listening. I'll see you
Thank you for
soon.
having me, Magda.
Thank you. It's been a pleasure.